All right, let's talk about why I have actually stopped trading the ES futures just for a short period of time. I'm not fully stopped trading. Of course, I look at that market each and every day, and that is the E-mini S&P 500 futures. I prefer the Nasdaq now, and the reason why, over the last few months is, for one, the Nasdaq is more liquid. You have a lot more setups that you can actually find because it moves more, and some people have a harder time. They prefer more so of a slower paced market, and that's you. Then you may want to try to trade like a thicker market like the ES or gold, or find future markets that actually move at a slower pace. I prefer, because I'm only looking for 1 to 2 trades a day, liquid markets to where there are multiple setups and I can choose 1 or 2 and be done, because I scalp. I'm not looking to stay in a trade for 30 minutes to an hour or half a day. I'm looking to be in and out of a trade in less than 5 minutes. Okay. Most times I'm not even in a trade 5 minutes. Sometimes it may take just a minute, and then I'll scalp, 20, 25 plus points and get out the market, just depending on how it's moving. But yeah, I want to say this right now, that for someone that does not like trading fast-paced markets, then the Nasdaq's not going to be for you. There's a lot of opportunity, like I said, because of the movement. If we look here, just for example, here at the this is the ES actually. Let's go over to the Nasdaq right quick. I'll show you the ES right quick. As you can see, Friday there was one nice pullback right here on a 30-minute. I mean, it's not 30 minute. I'm sorry, 30 range chart right here. I don't trade time based. I trade range charts. I know a lot of people out there trade time based charts, but I prefer to trade range. I've been doing this since I started. I like the flow of it. I like the smoothness. I like the cleanness of the charts versus time based, where you have long, small wicks. Just a lot of I guess congestion. You can see on time based charts things that don't look as clean. Maybe if you come from trading time based charts, then that's fine. And I always tell people, trade what works for you. But range charts are cleaner to the eye to me. So. But yeah, I mean, like on Friday, just for example, there was, really not but one setup that you could have actually taken. This was a pullback to an area here, but it was, which was a demand, but it was low probability. Now, if we look at the Nasdaq futures, for example, you can see, in compared to the E-mini S&P 500, there were 1, 2, and 3, and this could be setting up maybe possibly for a fourth one if it was to come back down here. But on Friday, which was August the 22nd, there was 3 good solid setups, just, with the market pull back to a higher range chart. Now, I'm not trading the higher range chart directly off of it. I'm looking at, I'm marking always up using top-down analysis from a higher range chart, whether it is a supply or demand zone. Then I'll scale down to a lower base chart. I mean, you can simply do this, especially if you're trading like the full-on E-minis and, maybe not the micros, but you can definitely make, $1,000 a day on at a minimum or more, just depending on what your capital size looks like, how many contracts you're actually trading. But I tell people who are beginners, always start trading with the micros. Do not jump into it, feet first, and just because you have the capital and with no experience, thinking that you're going to, start making tons of money overnight. And that's the thing. You have to get your mind out of and shift from thinking about the money aspect of things and thinking more so about looking for quality setups, because the money's going to follow. That's like anything else in life. Just find something that you love to do and be passionate about it and master that, and then things will follow through. So I'm not concerned about the dollar amount. I'm not concerned about what I need to make on a daily basis. I'm concerned about taking quality setups, because I don't want to force the envelope or something that's not there. A lot of people do that. They force themselves to take trades that aren't the best type setups, and then they lose. You also want to kind of create a trading plan for yourself and determine, which times of the day are you going to trade? What sessions are you going to trade? To me, the New York session is the best opportunity to trade if you're looking to be and make money consistently. Trading some of the after market hour sessions like the Asian market, when it comes to the indices, I'm going to tell you right now, there's lower volume there, okay? I mean, you got to think about it, why they call it the Asian session, why they call it the London session, because when our markets are closed here in the U.S., as far as, the stock market, for example, then foreign markets open up, like the Asian market. Okay, they have their own exchanges and they have their own markets that trade, as well as the European markets. Okay, so but if you're looking to trade a market outside of the New York session, I would definitely recommend the I'm trying to say the London session. But you have to be, depending on your time zone and where you live at. You have to understand that the London session opens up like 3 a.m. That's Eastern time, my time. So trying to get up to trade that, unless you're a night owl, is going to be tough to do. Now, what I want to share with you today is just a simple strategy setup very quickly. I'm not going to go so much into great detail about it because I do that so much here on the channel. That's why I recommend it if you're interested in understanding a great strategy, that you spend time watching the video content, or maybe become an elite or an ultra elite supporter of the channel, which I'll talk more about. That's where you get private behind the scenes, backdoor access in reference to the full-on breakdown of trades that I actually taken surrounding the strategy, where I walk you through the setups and talk to you about the strategy and how it actually works as I apply it to each one of the trades that I've actually taken in these videos. It's a series of videos, which I call them trade breakdowns videos. They're basically videos that where I posted my trade entries over in the Discord, and the Discord is free if you're interested in joining. The link is down in the description portion of the video. But that's where I walk you through these setups, and there's tons of those videos there where I walk you through these setups that I've taken, so that you can understand the strategy. And I try to make it as clear and as clean cut as possible, so that you understand. But yeah, let's just kind of talk about that right now, because that's probably what a lot of people are interested in knowing more so. Did I actually quit the ES? No, I haven't. I look at it every day. But if I don't see a clean setup, or if I see one, say for example, that is kind of mirroring or at the same time frame as the Nasdaq, I'm going to take the Nasdaq because I know I can get to that trade and get out quicker. But yeah, I'm always looking at the E-mini S&P 500. I just haven't traded it recently. Been sticking to the Nasdaq futures. Now, let me show you, because the number one thing that most people and the reason why they aren't consistent, they fail, is because they don't understand one particular concept, and that's structure. It's simple. I mean, you have to really understand which way are we looking at the market. Is it moving higher? Meaning, is it taking out highs each time it makes a new high? Is it making higher highs? Or is it reversing to the downside? That's another thing that I go into. Because if you choose to become like an elite or an ultra elite member or supporter of the community, I break things down when it comes to market structure and price action very clear, so that you can understand. I actually did a great video for all those that want to join and become an elite or an ultra elite supporter. A market structure video. It's about 45-50 minutes long, but it gives so much great quality detail where I'm breaking things down down to the most elementary standpoint, so that you can understand structure. Okay, received a lot of good comments. People telling me that it was a great video for them and it helped out. You can always go back and rewatch this stuff as well, and I highly recommend doing that. But yeah, determine the overall direction. Up, or we moving down? And if we're moving to the downside, then I'm just looking for supply setups. If we're moving to the upside, I'm looking for key pullbacks to areas of demand. Now, one thing you may want to follow as well as, or a lot of people ask this question: can they trade purely from the charts without looking at anything else? Yes, you can. Okay, that's how I got my footing, and I went back to a naked charts many years ago, because I was like most people. I was using so many indicators and relying on them, and they don't work. Not to say they can't help, but they don't work as far as trying to, telling you or letting you know if you need to get into a trade or not. I'm not that type of trader. I'm looking purely at structure now and understanding more so, because I knew I was missing something, and that piece of the puzzle was not understanding the flow of the market. Okay, you can follow order flow with your eyes by looking at the movements on the chart, but if you want to bring into the fold pure order flow in relation to like orders hitting the market, like cumulative delta down here at the bottom of my chart, I'll show you here on the Nasdaq. This is my 120 range, higher range chart. You can see this here. Now, it may look kind of similar to price action in reference to the candles on the chart, but cumulative delta tells or gives an inside story to what is actually taking place when it comes to orders that are hitting the market. We're talking about market orders, not limit orders. All right. Some of you may trade with a heat map or book map. Those orders that you see on there are limit orders, of course, where people are interested in buying and selling. And sometimes those orders, whether it's a ceiling or floor, may be stripped away, and they can be fake orders. Or if they hold up, then they're real orders, right? But market orders are orders that people are you can see it on your charts just as well. So like, for example, like this was an area of support right here, right? We came back and tested this area. All right, now this is a demand zone as well. It's a valid high probability demand zone, but it's also support. It tested this because you have buyers coming to the market, more buyers come to the market pulled back, more buyers coming to the market. So this area is a floor right here, meaning that at some point at this high volume area, they will take that out, and that's going to be liquidity. So all these buyers right here, buy orders, they will become liquidity if they do not take profit. At some point, they'll get ran to the downside because the market is going to, make sure they grab this area of liquidity or test it to see who's home there, so they can actually stop traders out that were interested or engaged in pushing the market higher. Now, again, some of these could be banks and institutions too, meaning that when they were pushing the market higher here, they pull back here to engage, maybe even retail traders to get into the market here, and they know like they're going to get out because they probably filled most of the orders here. So when they come back down here, eventually they're going to stop out all those retail traders right there who they tricked into getting into trades pretty much right here. But you just have to be smart and be able to read the market. Now, the way the strategy setup actually works is simple. I'm looking for, based on the higher range chart, is what are we doing? Are we moving higher or lower? Okay, meaning breaking structure. So like on the 20th, okay, a couple of days ago, the market was reversing here to the upside after making this bearish run of over 1,000 points to the downside. We had where the market made highs, higher lows. Remember what I said about each time it makes a higher high? Then that tells me the market is reversed, push higher, making higher highs and higher lows. So you look for key areas of demand to take the market back to the actual upside. Okay, so like just to show you as an example, this was a quality area of demand, high probability right here. Market comes back, demand setup, go long. You can see the aggressive buying, and it breaks more structure to the upside, leaving behind this demand zone right here. Okay, so if we're making higher highs, as long as it's doing that and we don't have like double tops or equal highs, be careful when the market is doing that. Like right here, I'll show you an example. But as long as it's making higher highs and higher lows and pulling back to a key area of demand, then we want to go along with the market to the upside. Okay, so I'll be interested in going long from here if the market was pushing higher to the actual upside. And then even like right here, the market pulls back and we have this another area of demand right here. Okay, so the market made a higher high breaking above this high here. It comes back. This is a demand zone, aggressive buying. It's high probability as well. So I always start with first understanding structure. Which way should I be trading? I need to identify what are we doing? Going lower or are we pushing higher, breaking structure? If we're going to the upside, breaking structure, after we had a nice push to the downside, then and we're breaking structure higher, then I'm only looking for key areas to mark up on my higher base chart. First and foremost, key areas of demand. Now, if you notice here, we made a high, came back, and then we tested this area right here, coming back up. We didn't break structure. So even though we may be in a trade right here, we could take it back up to the high. We got to be careful here when it gets back up to this area, because this is kind of telling you something that if they fail to push higher and break structure and then start coming to the downside, then you got to understand that, okay, that's a sign of weakness and they may be trying to push lower, which they did. So basically when they came back and tested this area of demand right here, this made a low, okay, and this made basically an equal high, but setting itself up for a lower high to come lower. So we make a low, coming down, breaking structure, breaking this low to the downside, and then it pulls back and it breaks more structure lower. We can look for opportunities at that point to go short. Okay, so I'm just kind of walking you through structure and price action and helping you determine, the shifts in the market and based upon the movements, which way you need to be trading. But it's all dependent upon what the market is actually doing. So let's look for, we'll use the strategy setup here, and we'll look for, trades that we can actually be taken right quick, whether supply or demand. I'm going to show you an example. So if we look at the market here, around the 13th of August, the market prior to that was bullish to the upside, and then we started, you can see lows, lower highs. When the market is not taking that high out, we must be shifting to the downside when it makes its first low, lower high, then it comes down. This is where people get kind of tricked out because they think that, okay, we should be looking for lows, opportunities to go short, right? But then the market gets a decent or nice retracement just to break structure lower. So we're still bearish to the downside. Following suit, as you can see, lows, lower highs, breaking more structure, coming down, as it's moving to the downside. So for example here, mark up your higher range charts based on, or your time charts, or whatever you're using for a higher perspective chart to kind of give you that further outlook. Mark up those charts because those areas of supply and demand are going to be weighted more so than trying to trade off of a smaller time frame chart or a smaller range chart or tick chart, whatever it may be, because the market may not hold all those areas. Bigger zones are going to hold a lot more than smaller areas, what I'm trying to say, off a lower chart. So like, for example, this was a supply area right here where the market came down at the break in this area structure, pull back, broke structure lower, okay? And then it creates this area of supply right here. That's aggressive selling. That's what supply is, aggressive selling, and demand is aggressive buying. So all I'm doing is marking up my higher range chart. Like there was a supply zone here, mark it up. There was a supply zone. This is, even right here, but I came immediately back to it. I prefer to see what the market pushes lower and then kind of pulls back into it with the green candles, meaning showing some bullish momentum back into the actual zone. So the zone was right here. And if you don't understand how to draw them, I've covered it in video content. If you go to the homepage and click on it, how to draw like supply and demand zones, you'll find video content there that you can watch. And I explain that as well. But as the markets were tracing back to, and I'll probably leave one down in the description or towards the end of the video where you find the end cap videos. If you follow through to the end, I'll leave a video there about how to draw supply and demand zones, okay? But anyways, as the market's pulling back, I've already marked up this higher range supply area here. And that's the first approach, okay? Well, the first approach is figuring out structure, which way we're moving, okay? We're moving to the downside because we're breaking structure, meaning we're taking out lows. I'm waiting for the market to pull back to this key area here, which is aggressive selling, right? So when it pulls back to the supply zone, I've already got it marked up on my higher range chart. I'm just scaling down to a lower range chart, whatever that may be for you, okay? For me, it's a 24 range chart. And the larger box is that higher range chart supply zone. So when it is tapping into a zone, okay, into the supply zone, I'm looking to see at that point, do we have where it's pulling into maybe a supply zone on the 24 range? Now, here's one right here. So basically like what they like to classify as a zone within a zone. There's one right here, okay, aggressive selling, and you can see the market reacts at it, but I'm not going to take that trade for the simple fact is because we have gaps up above it here where the market can fill these gaps and want to test this supply zone right here. So I'm going to be careful about taking the first zone on a smaller range chart, where there's imbalances or gaps that need to be filled above, okay? So what I'm trying to tell you is that if you see a zone on the lower range chart, after you mark up your higher range chart and you're interested, say, okay, here's a 24 range or lower chart supply zone that's on the inside of the higher range chart zone, I'm not more likely going to be taking that trade unless it like shows me that where maybe I'm getting rejection and the market's making lower lows, meaning breaking structure lower and then pulling back. In this case here, what it did was it came into the zone multiple times and broke above it right here to come back down, make a higher low and push up higher to fill in some more imbalances. So if I see things like this, I prefer to see and wait for the market to break structure, showing me it wants to go lower. So like here, this is not showing me anything like it wants to go lower. What it's showing me is that it's making a higher low to push higher. So then in that case, I'm going to wait for a low to be created. This is where it's making equal highs, okay, or similar highs, and then it makes its first low. Then it makes a lower, well, it swiped above here. It's making more equal highs here or similar highs, but then it makes a new lower high. I'm sorry, a new lower low, not lower high. So we're starting to make where it's making lows, lower highs in a sense. These are just similar highs, and then it makes a new low right here. So I'm interested in this opportunity to trade from because now the market is showing me that it's rejecting to push higher and break higher. Like right here, it made an attempt at this area here, but it made a low, and then it started making these small little wicks above, making similar highs in a sense, but then it makes this lower, it makes this a higher low here, and it breaks up and it takes out this area here to basically push through and push up to test these imbalances right here. So I'm interested in looking for more so where it's going to show me some rejection to where it's going to maybe make a low and then lower highs and then break structure and then a pullback. Now sometimes, for example, if this was on the 24 range and there was on the lower range chart, a nice supply zone on the inside of the higher range where there was no imbalances filled to the upside or above this area right here, I would engage in taking that trade. Be interested in taking it if we're getting rejection at that zone. But because we had multiple imbalances above it, that's a no-no for me. So I'm going to wait for something to show me where it wants to, the market to show me where it wants to go lower by making lows, lower highs, lower lows, going to the downside. All right, and then a pullback to a key area of newly formed supply to go short. And that's where I would go short at, is right here in this area here. Simple strategy, okay? Now, if we look at a demand setup right quick, I'll show you, all right? There was one at 10 o'clock, and I mentioned this on Friday's video. The market was making lower lows, lower highs, and then we got a reversal to the back to the upside, because you can see it making these higher highs and higher lows. Kind of consolidates, moving sideways right here. When it pushed up, it came back. Okay, we never took out this low here. So it basically made a higher low just to push back up to take out more structure to the upside. And this is a basically a major high right here where it took out, because we got a bear retracement to the downside or pullback, and then it starts making higher highs and higher lows to the upside. Okay, so this right here was a nice demand area right here. It's at 10 o'clock on Friday. That's Eastern time. But again, I didn't take this trade because of the fact is it's high impact news. So please stay away from news. Even though the setup may look clean and look sweet, you know, you never know if they're just going to run through this and want to fill all these imbalances back down here and then run to the downside and then be a breaking structure lower. It did hold, and they started making higher highs and higher lows from there. Now, this opportunity right here, as I said, this was a demand area here, and then there was another demand area here. Push up, pulling back, breaking higher, taking out structure, leaving behind this area of demand right here. So we're going to mark that up on the higher range chart, right? So then we'll go down to a lower range chart. This is the higher range zone right here. As the market's retracing to it here on the lower range chart, this is the chart I'm entering off of. You got a couple things. You can look for a 24 range demand zone resting on the inside of the larger demand zone from the 120. So this is zone within a zone or multi-chart confluence setup. You can go long off of this area right here, okay? Because we got the market push up, pulling back, breaking structure higher, feels the imbalances coming back to this demand zone right here, and then it pushed to the upside. We're aiming at that point, if we're looking to trade off this area right here, to take out or, you know, move up to the high, back up to the highs right here. Or if you missed that opportunity, you can look for, you know, where the market is changing direction on the 24, okay? Meaning breaking structure, on taking out some areas to the upside, like right here, made a high, came back, broke higher right there. So there was a demand area right here, as you can see on the 24 range chart, okay? Now, the thing about this right here is that it actually wanted to come down and test a little bit lower before pushing to the upside. So if you got into the trade off of this demand area right here, you can see it aggressive buying, took out structure, came back. Right here, yeah, you probably picked up something. Maybe you got into the trade here at 23,612. It goes all the way up to 23,628. You picked up some points, and then it comes down and tests just a little bit lower to push back up to the upside. So let's say, you know, you had your stop here at 605 or 606. Where did it come down to? 600. So yeah, 3 or 4 point stop loss, like I talk about most. You probably got stopped out there, but you could have re-entered, you know, back to the upside. But this is a valid area to take a trade from going long, because we're tapping off of a high probability demand zone right here to go long on the higher range chart. So you have opportunities to trade. Again, this is a zone within a zone that I talk about a lot. Lower range zone off the lower range chart on the inside of the higher range zone from a higher range chart, okay? Zone within a zone, small zone on the inside of the larger zone. You know, the market comes to it, reacts, comes back. Maybe you had your stop right there, tick to tick. That's a no-no. You know, in my book, give yourself about 3 or 4 points breathing room, because most times they would love to come back there and test and stop those buyers out right there before, and then they'll push higher, and then you get frustrated, okay? So just look for, place your stop. This is where you're going to place your stop at. The moment you get the rejection at the zone, so that's going to be right here at 595, give yourself about 3 or 4 points from that area there, because it just in case they come back here, but it does run to the upside, pulls back, and then it goes all the way back up to the high right there. Okay, again, if you're waiting on that structural break and don't want to take the first pullback to that area of confluence area of demand on the 24 range, and then you're looking for, weakness to go long, waiting for, a break of structure. Yeah, they kind of, right here, if you got to the trade here, they came back on you, maybe stopped you out. Maybe you could have re-entered right here to take the market back up, because the higher range chart is pushing to the upside, as you can see, and they just broke and took out and made a new high with a clear candle break. So they're going to come back and probably test this area just to retest that high right there. So either way, it would have worked out. You just got to know which one of these setups that you actually want to take, the zone within a zone, or wait for the structure to be taken out after the rejection at the zone to go to the upside. Okay, but that's what I want to share with you guys today, is it's a strategy setup, how it works, how you can go about becoming profitable and making money, as long as you understand structure. That's the key thing I tell people all the time. That is, the basis to it all, is understanding which way to actually trade and not trading against the actual market. Now, again, if you're interested in becoming an elite or an ultra elite, the link is down in the description portion of the video. It's right below the Discord link. It's titled Ultra Elite Supporter. If you want the trade breakdown videos, which there are a ton of those video content where I walk you through structure, price action, where to place your stop loss, profit targets, things of that nature surrounding these trades that I've taken. So I'm walking you through, as just like you're sitting right next to me, my mindset, okay, and explain to you why I took those trades. And there's tons of videos that you can watch there and educate yourself on, so that when you're back testing and forward testing, you know what you're kind of looking at. All right. As well as you get the video playlist and a great video that I covered on market structure for anyone struggling with that concept. Now, if you want to become an ultra elite supporter, now that's where you get everything I just discussed, plus my live recorded trading sessions. Okay, that's where I'm recording my session as I'm trading live. You see me engage in live trades. I'm explaining to you the trades that I'm taking, so that you can understand what I was looking at again and why I took those trades within that session. All right. And you also receive the market recap videos. Now, both of the tiers are very inexpensive, but once you click that link down in the description portion of the video, it'll show you the cost for each one of the tiers. So click on that. 3 tiers will pop up. Choose either the elite or the ultra elite supported tier if you choose to join. Okay, but the price is there. If you click on the tier, it'll show you the perks and rewards that you receive for each tier. That's all I have. Okay, just want to share that with you guys. But both links, the Discord and the link to become a supporter or gain access to the private community, is down below. But again, that's all I have. If you haven't taken time to sub or to subscribe to the channel, please take the time to do so by clicking that subscribe button. Make sure to click the bell as soon as you do, so that you do not miss any of the uploaded content here on the channel. And last but not least, if you found value in today's video, please make sure to drop me a like, thumbs up, and share the video content as well by clicking the share button to share with your social media outlets. Whoever you may know that may have interest, or work colleague, a friend, family, whoever it may be, also share the video content. Take care. I'll see everyone in the next one.